What if I told you there's a government-backed tax credit that could put thousands of dollars back in your business's pocket per employee you hire, and most businesses don't even realize it exists? It's called the Work Opportunity Tax Credit, or WOTC. And here's the kicker. This powerful credit is set to expire at the end of 2025. That means, unless Congress acts, you may only have a limited window left to use it. In today's video, we'll dive deep into what the WOTC is and why it exists, which employees qualify, how much money you could be saving, step-by-step how to claim it, real-world examples of businesses putting it to use, and why 2025 is your last chance to leverage this credit before it disappears. Stick with me, because whether you own a small business with 5 employees or manage a large team, this is an opportunity you don't want to miss. This could be your last chance to leverage one of the most generous tax incentives out there. The Work Opportunity Tax Credit, or WOTC, is a federal tax credit designed to encourage businesses to hire individuals from specific groups who face significant barriers to employment. This credit isn't new. It's been around since the 1990s, but it has been renewed multiple times by Congress, and right now, it's scheduled to expire on December 31st, 2025. In simple terms, if your business hires someone from one of the target groups and they meet certain conditions, you can claim a tax credit based on their wages. It's not just a deduction, it's a dollar-for-dollar credit against your tax bill. That means if your WOTC claim is $2,400, that's $2,400 directly off your taxes. So if your business owes $20,000 in federal income taxes and you qualify for a $5,000 WOTC, your tax bill drops to $15,000. That's real money staying in your business. The purpose of the WOTC is twofold. 1. Help people find jobs who might otherwise struggle to get hired. 2. Reward employers financially for giving these individuals a chance. The government recognizes that some groups, like veterans, long-term unemployed, or people receiving government assistance, face barriers to entering the workforce. By offering employers a tax credit, it makes hiring these individuals a win-win. The employee gets an opportunity, and the employer gets a tax benefit. The WOTC was originally created in 1996 as part of a bipartisan effort to encourage businesses to hire workers who often get overlooked. Since then, it has been renewed and extended several times. Sometimes it's been extended for just 1 year, other times for multiple years at a time. Currently, the credit is authorized through December 31st, 2025. But here's the catch. 2025 is also the year when a huge wave of tax provisions from the 2017 Tax Cuts and Jobs Act expire. That means Congress will already be juggling major tax law changes. Will the WOTC survive? Maybe. But there are no guarantees. And if it does disappear, 2025 will truly be your last chance to leverage it. The WOTC was designed with 2 goals in mind. 1. Help disadvantaged groups find employment. Many people face systemic or personal barriers to getting a job. The WOTC gives employers a financial reason to give them a chance. 2. Reward businesses for doing the right thing. Hiring and training new employees is expensive. By providing a tax credit, the government makes it easier for employers to bring on workers who might otherwise be overlooked. It's a win-win. Employees get an opportunity, and businesses get rewarded financially. This is where things get interesting. To qualify for the WOTC, your new hire must come from one of several target groups. Let's go through them in detail. 1. Veterans, especially those who are unemployed, receiving food stamps, or have a service-connected disability. Example: a veteran returning from deployment who's been job hunting for months. 2. Long-term unemployed, individuals out of work for at least 27 weeks. Example: someone laid off during the pandemic who struggled to re-enter the workforce. 3. SNAP recipients, people receiving Supplemental Nutrition Assistance Program benefits. Many businesses, especially in retail and hospitality, hire from this group without realizing it. 4. TANF recipients, those receiving temporary assistance for needy families. 5. Ex-felons, individuals with felony convictions, hired within a year of release. Example: a small manufacturer hiring workers re-entering society. 6. Vocational rehabilitation referrals, workers referred by rehab programs. 7. SSI recipients, individuals receiving supplemental security income. 8. Designated community residents, people living in high poverty or high unemployment areas, often called empowerment zones. 9. Summer youth employees, teenagers, ages 16 to 17, living in empowerment zones and hired for summer jobs. Each group has specific criteria, but here's the key. If you're regularly hiring, chances are you've already hired someone who would have qualified. You just didn't file the paperwork. The size of the WOTC depends on the employee's group, hours worked, and wages earned. Here's a breakdown. Most groups, up to $2,400 per employee. Veterans with disabilities, up to $9,600 per employee. Long-term TANF recipients, up to $9,000 over 2 years. Summer youth, up to $1,200. The calculation is straightforward. 25% of wages if the employee works at least 120 hours. 40% of wages if they work 400 plus hours. Let's put numbers to this. Say you hire a qualified employee and they work full-time for a year, earning $20,000. You could claim 40% of their first $6,000 in wages, equals $2,400. Now imagine you hire 10 employees in a year, and 3 qualify. That's $7,200 in credits. If all 10 qualify, you could be looking at $24,000 or more. Let's look at how this plays out in real businesses. Restaurant example. A fast food franchise hires 20 employees a year. At least half qualify for WOTC, averaging $2,000 per employee in credits. That's $20,000 saved annually, money that can be reinvested into operations. Construction company example. A small contractor hires veterans with trade skills. 3 of them qualify for $9,600 credits each. That's nearly $30,000 in tax savings in a single year. Healthcare example. A nursing home hires from local workforce programs. 10 employees qualify, saving the facility $24,000. The point is, whether you're in food service, retail, healthcare, or skilled trades, WOTC is money many businesses leave unclaimed. Here's the part where many businesses miss out: the certification process. To claim the WOTC, you must 1. Pre-screen applicants. Use IRS Form 8850 on or before the date of the job offer. 2. File with your state workforce agency. Submit Form 8850 within 28 days of the new hire's start date. 3. Receive certification. Your state agency reviews the application and confirms if the employee qualifies. 4. Claim the credit. File Form 5884 with your tax return. If you miss that 28-day deadline, you lose the credit. No exceptions. That's why many employers partner with payroll companies or accountants to automate the process. 1. Not filing on time. Again, 28 days is the cutoff. 2. Assuming small businesses can't benefit. Even one qualifying hire makes it worthwhile. 3. Failing to educate HR. If your hiring managers don't know about WOTC, they won't collect the forms. 4. Not tracking hours properly. Credits depend on 120 or 400 hours worked. 5. Forgetting to claim the credit on the return. Yes, businesses miss this step all the time. So why is 2025 your last chance? Because as of now, the WOTC expires on December 31st, 2025. Congress may extend it, but with so many other provisions expiring, the child tax credit, individual tax brackets, estate tax rules, it's not guaranteed. That means businesses that want to maximize the credit need to start right now. Don't wait until 2025 to think about it. Build WOTC into your hiring strategy today. The WOTC isn't just about saving money. Businesses often find unexpected benefits like larger candidate pools. You'll tap into groups of workers who are motivated and eager for opportunities. Reduced turnover. Employees given a second chance often stay longer out of loyalty. Positive reputation. Hiring veterans or giving opportunities to disadvantaged workers builds goodwill in your community. Access to workforce programs. Many states offer additional training or subsidies alongside WOTC. So while the tax savings are the headline, the impact on your workforce can be even greater. Let's clear up a few myths. Myth: only big companies can use it. Fact: any business, large or small, can benefit. Myth: it's not worth the hassle. Fact: a few forms can save you thousands. Myth: employees will know they're being hired for the credit. Fact: the paperwork is confidential, and hiring decisions are still up to you. Myth: you can't use other credits if you use WOTC. Fact: you can still claim other tax breaks, just not on the same wages. If you want to leverage the WOTC before it sunsets, here's what to do. 1. Update hiring packets. Add Form 8850. 2. Train your HR staff. Make sure they know the 28-day rule. 3. Coordinate with your accountant or payroll company. Automate submissions if possible. 4. Track hours closely, especially that 400-hour mark. 5. Plan ahead for 2025. Budget WOTC credits into your tax planning. Here's why this is urgent. In 2025, several provisions from the 2017 tax law expire. Individual tax brackets may rise. The standard deduction may shrink. Estate and gift tax exemptions may drop, so you may already be paying more in taxes starting 2026. Losing the WOTC on top of that could make things even tighter for small businesses. That's why leveraging WOTC now matters more than ever. Quick recap. The Work Opportunity Tax Credit rewards you for hiring from targeted groups. The credit can be worth up to $9,600 per employee. You must file Form 8850 within 28 days of hire. The credit is set to expire after 2025. Now is the time to act. If you're a business owner and you want to make sure you're not leaving money on the table, now is the time to act. At Fenton Tax Help, www.fentontaxhelp.com. We specialize in helping businesses capture every credit they qualify for, including the Work Opportunity Tax Credit. Don't wait until 2026 to realize you missed out. Contact us today, and let's build WOTC into your hiring and tax strategy. And if you found this video helpful, hit the like button, subscribe for more tax-saving strategies, and share this with a business owner you know. Thanks for watching, and I'll see you in the next video.